Hey, how's it going, everybody? My name is Troy Hackett. I am a managerial accounting TA, the head TA for Professor Paz's class at Cornell University. And today we'll be going over job order costing, more specifically a question, and I'll be going over the concepts while going over this question as well. So let's get right into it. So it says the following data or the following cost data relate to the manufacturing activities of Newberry Company during the just completed year. So they give us a bunch of revenue figures, or not revenue figures, they give us a bunch of cost figures. And it says the company uses a predetermined overhead rate to apply manufacturing overhead costs to production. The company estimated $330,000 in total manufacturing overhead, or 11,000 labor hours, and 22,000 machine hours for the year. A total of 23,000 machine hours were recorded for the year. And it says calculate the predetermined overhead rate for the Newberry Company. For the formula for the predetermined overhead rate, what we're going to have to do is take the estimated manufacturing overheads, that's $330,000, and we're going to divide it by 22,000, okay? So keep in mind, this is a predetermined overhead rate, right? So at this point, we don't have access to the actual costs and the actual hours, right? These are estimates we take before the period incurs to kind of give us a feel of how much money we're incurring to, use these machines, right? And we do that and we get $15, right? So that's our predetermined overhead rate. So that's part one. Part one is done. Now it says compute the amount of underapplied or overapplied manufacturing overhead costs for the year. So what we're going to do is do 353,000 minus 15 times 23,000 hours, right? So this is the actual amount of hours. And that's very important to understand, right? So what we're doing is we're taking the actual cost figure minus that overhead rate times the actual amount of hours. Because at this point, when we're applying the manufacturing overhead costs, we're applying the amount of underapplied or overapplied manufacturing overhead costs. We have the amount of hours we've done. Like the period already ended. We know how many hours we incurred. We just don't know the cost. So we're taking that per hour estimate we found earlier, multiplying it by the actual hours to find, relatively how much. It's a better estimate than before to find how much we're about incurring, but we subtracted by the actual cost figure to see how much we were, how far off we were. So in this case we were $8,000 off, right? So this means that we were $8,000 off, and you would say that we underapplied by 8,000. Right? Underapplied. Because we thought it was going to be $345,000, but in reality the cost was $353,000, right? So in reality we had to, pay $8,000 more than we actually realized. Hey, what's up guys? This is Troy from the future, and I want to re-explain that whole tangent I was going on for the last minute and a half about over/underapplied manufacturing overhead. So just to reiterate, we multiply 15 times 23,000 hours to get the manufacturing overhead. Now, even though we had a forecast number beforehand, this multiplication gives us a more accurate number to see how much our manufacturing overhead truly is, because we're using an actual number, right? We have the actual amount of hours, so this figure is going to be a little bit more accurate. So that's what we actually apply in our balance sheet, or whatever we're applying this cost figure to. Now, later on, we're going to get the actual cost figure, which is $353,000. Now, obviously, we were off by a little bit, because if we multiply 15 times 23,000 hours, we only get $345,000. So we were off by $8,000. We paid $8,000 too little. Therefore, we underapplied our cost of by $8,000. So basically, we want to put this cost figure onto our books. So we put $345,000 as a placeholder, and then once we get the actual figure, we readjust it to show for the actual amount of overhead. I hope that makes sense, and let's get on with the video. Now for 1.3, it says calculate the cost of goods manufactured for the year. So now what we're going to do is we're going to do 345,000. So that is the overhead cost we think we're incurring, but in reality is a little bit higher, but we don't know that at this point. And now we're going to add all those other costs, right? So right here, this is overhead, right? Now we're going to add our labor costs. Labor is $135,000. We're going to add our materials, $250,000. And I'm getting all these figures right here, okay? Now, you gotta be careful here because for the purchase of raw materials, it says both direct and indirect. Now, what that means is that over here, they also incurred indirect material costs, right? So what this is basically telling us is that we wrote in the indirect cost twice, right? We wrote it in twice, we double counted it, right? That means we got to subtract $15,000 of indirect materials because we counted it twice, right? So minus $15,000. So just to clarify, right, this number right here and this number right here, they both counted $15,000 in indirect materials. Now we got to subtract $15,000 because we double counted that indirect materials. Next, we got to look at inventories, right? So we got inventories here. And the rule is that for the ending, you subtract and beginning, you add, right? We subtract those ending inventory numbers because we never actually use it for production, right? We bought the materials, we were going to use it for production, but in reality, it was just leftovers and we never actually use it for production, right? So we don't incur that cost. So we are going to add 10,000. And we're going to subtract 15,000. And then we are going to add 20,000 and minus 35,000. Okay? And we're going to do that in my calculator here. We're going to get $695,000. And that is our total cost of goods manufactured for the year. Okay? And now there's more of the question, right? So it says job 15 uses 12,000 or 21,500 in direct materials, $17,000 in direct labor, 1,100 labor hours, and 2,200 machine hours. How much is the total cost for job 15 for the period? So in order to find these costs, we're going to have to add that labor cost, the material cost, and the overhead cost to find the total cost for this job. Okay, so direct materials, they already gave it to us, 21,500, pretty easy stuff. We're going to add 17,000 for direct labor. And to find the machine hours, or to find the overhead, we're going to do 2,200 times 15. And they also give you labor hours. They give you 1,100 labor hours, but we don't really need that figure here, right? Because we already know the labor cost, and since we know the labor cost, labor hours isn't really needed here. For example, if they gave us cost per labor hour and they didn't give us a total labor cost for this job, then it would be more relevant. But in this situation, it's more of a distracting number. Okay, it's not needed here. So we're going to add those up, and we are going to get 21,500 plus 17,000 plus 2,200 times 15, and we are going to get 71,500. Okay. Next up, it says 1.5 says give 2 reasons companies utilize a predetermined overhead rate. And I'm going to show the solution that Professor Paz gave to you guys. I'm going to drop it on the screen, but the way I would explain it is that it kind of gives us an estimate and gives us, in the ballpark of how much cost we're going to be incurring before those cost figures come in, right? It gives us a broad estimation. It's kind of like looking at a weather forecast, right? It kind of tells us, like if it's gonna rain that day, if it's not gonna rain that day, it's not gonna be completely accurate, right? We're not gonna be like 100% accurate all the time, but it's gonna get us, close enough that we can allocate our money properly so we can cover those costs when, we actually have to pay it. And for 1.6, it says, given your answer in 1.1, how would you account for the under or over applied overhead at the end of the period? And it's pretty simple. What you're gonna wanna do is so as we talked about earlier, we had $8,000, right? We didn't pay, right? We under applied by $8,000, meaning we paid $345,000, but in reality, we had to pay $353,000. So what you're gonna wanna do here is just add another $8,000 on the income statement towards cost of goods sold. Just pay that extra $8,000 to cost of goods sold, and you're gonna be A-okay. So that question, it is pretty bulky, so you guys got any questions about that, just leave it down in the comments. And as always, if I made an error somewhere in this video, I'm gonna correct it either in the pinned comment or in the description. So check those out, just to double check I did everything correct, but I'm pretty sure everything is right here. I think the most tricky thing about this question is knowing that the indirect materials was counted twice in the cost figures they gave us. That's pretty hard to spot out. When I first did this question, I actually missed it back. I did this question like 2 years ago for the first time and I missed it. And additionally, you need to know that predetermined overhead rate equation, which is just dividing those two estimation numbers, those two forecast numbers. So yeah, that's pretty much it. Hope you guys enjoyed, and good luck on that exam.